Hi, everyone. We're thrilled to get to spend this session talking about the Sorensen Impact Foundation's journey to 100% impact investing. The goal of this session is to really talk about how SIF went 100% in on impact across its entire portfolio. We can talk about our motivations for going 100% in on impact, how we actually built an 100% impact portfolio, some lessons learned along the way, how the portfolio is performing, and some impact highlights from the portfolio. So without further ado, let's introduce ourselves. Meredith, do you want to start?
Sure, of course. So hi, everyone. I'm Meredith Shields, Managing Director at the Sorensen Impact Foundation. I am proud to be able to work closely with Lauren and the Sepio team. And the Sorensen Impact Foundation is a foundation created specifically to be an impact investor. So we support social entrepreneurs and invest in fund managers globally who are focused on making the world a better place. I manage our early stage investment portfolio, work closely with Lauren, and also manage our grant program, which is primarily focused on impact investing field building. So this is my favorite topic, and I'm really happy to be talking to all of you with Lauren today.
Likewise, Meredith, this is so fun. I'm Lauren Sercu. I'm a managing director at Sepio Capital. Sepio is a multifamily office and institutional advisory firm, and I lead our impact investing practice. So I work with clients like the Sorensen Impact Foundation to build portfolios that are targeting market rate returns. That's really important. That's a theme that we'll talk about in this discussion, alongside very strong outcomes-oriented social and environmental impact. So with that, Meredith, I'd love to just kick it off and ask you to give a little bit of history on the Sorensen Impact Foundation and how Jim and the board came to this pretty monumental decision to transition 100% of SIF's corpus into impact investments.
Sure, happy to. So I'm going to back up just a little bit. The history of the Sorensen Impact Foundation, which was established almost a decade ago now by Jim Sorensen, the foundation was established to be bold. Like I said, we were trying to push the limits. Jim was trying to push the limits of traditional philanthropy and explore innovations and new ideas and ways to do more, not only with the capital of the foundation, but with our resources, partnerships, and our work. And so you're going to hear that theme, I think, consistently throughout this and other talks that we give. But as far as how we came to the decision, so let me first explain. So traditionally, endowments for foundations represent a large pot of money that is specifically there to earn a return. And that return enables the foundation to exist into perpetuity and continue to make annual grants and donations. But I think, Jim, being an innovator and an entrepreneur, looked at that and said, wow, so the largest percentage of our dollars is actually just there to make money, and we're not using it to make an impact. And he had a problem with that. And as he was having those conversations or thoughts, others in the industry were, excuse me, it's pollen season in DC. Others in the industry were starting to have the same conversations around how can we put that capital to work? How can we invest that capital in a way that it does more than earn money and subsist the foundation, but it also can have an impact of its own alongside that. So Jim reached out to Sepio, of course, who is our partner on almost everything that we do, and said, you know what, I want to do this. I want to explore how we can move all of the assets of the foundation into impact and working for a greater good. But I don't want to sacrifice return. And I want to make sure that we are continuing to have that fiduciary responsibility and ensuring that the foundation lasts and is able to continue to distribute funds, not only as investments, but as grants over the foreseeable future too. And so that's how we came to the point of our board voting to go ahead and do it. And so actually, I think that's a good question I would put back to you, Lauren, is this was a unique request of Sepio or of any financial advisor or CIO. And I kind of know the story, but I'd like for everyone to hear, like, how did you think about this, and how did you all specifically balance that that need to have a risk-adjusted return that was at least as high as what we had before, and find new investments that would bring impact and make our money work in a different way? How did that go for you all?
Yeah, I'm glad you asked, Meredith. It's one of my favorite things to talk about. I mean, first, we have to acknowledge that this request really came from Jim and from you and the foundation board. And look, for Sepio's founders, our team has worked with Jim's family for decades. So when Jim and the Sorensen Impact Foundation board said they wanted to pursue 100% impact investments across the foundation's investment portfolio, I think our founders were very committed to being a part of that solution. We weren't sure at the get-go exactly what that looked like, but we knew we wanted to jump in and support this effort in as authentic a way as possible. And interestingly, at the time, the Sepio Capital team was sitting inside the private wealth management division of a very, very large bank. And one of the things about managing client capital from inside a bank is oftentimes you have to pick investments for your clients' portfolios that are what we would call kind of on platform, if you will. And what's on platform means what's approved to be recommended for clients. And I'm sure it won't come as a surprise to you, Meredith, that what was on platform at the time, and we, just for context, this was in 2017 that the SIF board reached this decision. What was on platform at the time was a handful of environmental social governance or ESG products and very little thematic impact investments. And just to delineate what we mean by those two differences, thematic impact investments are more pure play impact investments that are often investing in companies whose business models are trying to scale positive outcomes or positive impact. And so I think our founders sort of looked at each other and said, wow, we're going to have to get creative, and really ultimately decided to break out of the investment bank. And this is really one of the pivotal reasons that they decided to set up Sepio Capital. So the SIF impact origin story is so closely tied to Sepio's origin story. So our founders spun out of the bank, started their own firm, and we've really spent the last 3.5, I guess it's been 4 years now, one, building out an impact investing practice. And that's meant scaling our team and our talent. So I came from Cambridge Associates to lead Sepio's impact investing practice. But we've made a number of hires to really help canvas the global opportunity set. There is no platform. The world is our platform. So we've spent years and years and years meeting with investment funds across asset classes in trying to tease out who's creating strong returns, strong impact, and doing everything in an authentic way. So that's been a really, really tall order. And the last point I'll make is an important one, is that Jim and the SIF board did not change their desires around financial return. And you talked about this, Meredith, but we really set out to find market rate investments by asset class. So importantly, our process was very similar. We use, when we're diligencing an impact investment fund, we're going through the same robust manager due diligence process that we would quantitative analysis, qualitative analysis, reference calls, as well as adding in some new muscles for diligencing their impact and their impact reporting. So it's been a fantastic journey, and really grateful that Sepio has been able to create this impact investing practice really around SIF.
Yeah, and I think Lauren's being a little humble. They not only created an impact investing practice, but I think that they've created a playbook and how to do this. As Lauren was mentioning, the big investment bank that Sepio was a part of before, the Sepio team was a part of, it was very uncomfortable to think about this idea of going out and creating a new strategy, not only a new portfolio allocation potentially, but going out and potentially investing in funds that were newer on the scene, had different mandates, had newer managers. And my understanding is that took a leap of faith. And fortunately, that's ingrained in the culture of what we do. And fortunately, that's ingrained in the culture of Sepio as well. So I think in many ways that Lauren has created a methodology for how to create these fully diversified portfolios.
Well, thank you, Meredith. I think part of the goal of this session and the roundtable that will follow is to open up that playbook a little bit and hopefully inspire others to take a look inside, see that we're generating strong returns alongside strong impact, and potentially consider heading down this road themselves. So with that, Meredith, I'd love, we are 3.5 years into this journey. A lot of times, some of the hangups when we're talking with other clients about who are interested in aligning their portfolio with their values or incorporating impact, oftentimes a hangup can be, am I giving up something on the return side? So I'd love if you would share a little bit about how SIF is doing from a performance perspective.
Sure, happy to. And I'll just say that as we were embarking on this strategy, we surveyed a bunch of people. We talked to our peers in the foundation world, other investors, and it's really interesting, even organizations that themselves are focused on social impact, there's still a feeling that impact investing can't achieve the same level of returns as traditional investing. And so the punchline of what I'm about to tell you is that we have, and we're actually doing better than we were before. So a couple components of that. Since we started this journey, we have outperformed our market rate benchmarks by a wider margin than we have before. So on an annualized basis, about 100 bips. Our annual return is about 11% each year, which is very competitive and right in line with what our targets are. But the best part is that money is not just making a return. It's doing so much more. It's lowering carbon emissions. It's helping students in low-income communities learn. It's providing workforce housing, low-income housing, lots of different things that we're proud to support with that capital. And I think importantly, as a field builder, what we're also doing and what we're hoping to shout from the rooftops through this event and others is that it's possible. you don't have to sacrifice. You can. There are plenty of investors who view their impact portfolios as concessionary, and they want just to return capital, or they want a modest return. But we felt like it was important for the industry that traditional investors see that you can invest with impact in mind, and that can be a strategy all of its own. And so we were able, through this strategy, not only to deliver the return, but part of how we did that was because we avoided some pretty big losses that occurred in companies and markets that we divested when we started this process. I would also advocate that in some ways, impact is a proxy for quality. So a lot of the companies and funds and managers that we're working with, they're making investments that consider people and planet. They consider suppliers, they consider fair trade, they consider how they treat their employees, they consider diversity, equity, inclusion. And all of these things in our minds make better investments overall. And so those are the components that we think have helped us to perform as well as we have throughout this journey, and hopefully continue into the future. So Lauren, I want you to tell us a little bit about the impact side around the details. So when one embarks on such a journey, could you give everybody a couple of examples of the types of impact that money has had alongside the return that I just talked about?
Yeah, I'm happy to, Meredith. So alongside strong financial returns, SIF has generated some really impressive and inspiring impact across our market rate portfolio. I think I'll kind of talk about it in three categories, which is how we report to the board, as you know. So first, there are kind of qualitative stories that come out of the portfolio. Then we have a quantitative impact framework that is evolving to report on the impact outcomes that are happening across asset classes, across all of our investment strategies. And then, of course, we also track the diversity of our investment managers. So to kick it off, a couple of fun stories from the SIF portfolio last year. The Sorensen Impact Foundation funded a potential vaccine candidate for COVID-19, which was pretty imperative last year. Also invested in a leading company targeting adult type 2 diabetes reversal with 60% efficacy when the leading efficacy around products was 1% from existing market solutions. Invested in the world's first non-hormonal birth control. Funded a sustainable asset manager that themselves has transitioned $1 billion on their platform from traditional investments to sustainable investments. So, and I could go on. We'll cut ourselves off, but those are a few of the story highlights from last year. When we look at some of our quantitative impact metrics that have come out of the portfolio for 2020, we have avoided, or our investments have avoided, over 20,000 metric tons of carbon, funded numerous fast-growing companies in the education technology and future of work sector that have reached over 100 million students, supported thousands of small businesses with over 500 million in loans that support working capital, day-to-day operations, salaries, which you can imagine was incredibly imperative last year. Created over 50,000 jobs and supported an additional 200,000 jobs, and preserved over 12,000 affordable housing units. And really just much more. We'll cut ourselves off on the quantitative metrics as well, but pretty impressive to see in just 3 years, some of the magnitude of the impact that the Sorensen Impact Foundation portfolio has created. And then, of course, importantly, we track the diversity of our investment managers. And I think, Meredith, this is something that I think you and I are both exceptionally proud of, and Jim and the SIF board as well. SIF has just over 70% of its investments with diverse managers, where we're defining that as 50% or more of the organization is owned or led by diverse individuals. So really, I think just an amazing start from an impact and performance perspective for the Sorensen Impact Foundation. And I think with that, in the next session, we are thrilled to be able to spend time with 4 amazing mission-aligned investment managers from the SIF portfolio, who are a big part of both our investment returns, but of course, our social impact that we've been able to generate from this portfolio.